let me introduce you Mrs. Angelika Gouskou, a member of the Hellenic Corporate Governance Council and co-founder of Governace Hub. The Corporate Governance Hub is a non-profit organization established in 2019 in Athens by Mrs. Gouskou and Mr. Gazzoli. And they have a value experience in the area of corporate governance. Mrs. Gouskou, thank you for being with us.
Thank you so much for the invitation. And thank you also, Ethos, for this organization and for promoting awareness on corporate governance. I was asked to elaborate the topic of the rising significance of non-financial metrics. And I hope that I will give you a good overview of this topic in the 10 minutes that will follow. The initiative step and a call to action for non-financial metrics was UN Sustainable Development Goals set in 2015. Since then, companies have focused on generating value and follow sustainability effective strategies. The set goals today provide also a critical framework for COVID-19 recovery. Sustainability became a pressing topic. The question was, are companies resilient to change and well equipped to manage changes in the environment in which they operate? Several companies started measuring, disclosing, and managing sustainability risks and opportunities. Environmental, social, and corporate governance consideration, ESG, was said and admitted to impact a company's ability to generate value. New metrics have emerged. These ESG metrics were set to assist investors in identifying and assessing a company's exposure to risks, its leveraging opportunities, and its long-term perspective. As a result of that, we had an increasing demand for information that was required by the corporate, and that was required. And also we had non-financial disclosure and transparency on all these three ESG considerations were asked. Nowadays, such disclosure is also required at a policy level through guidelines like the EU Non-Financial Reporting Directive. Thus, one could say that our understanding of corporate accountability has progressively changed. Investment and credit rating seem nowadays old-fashioned, if not accompanied by ESG. Given that most of corporate value now is traced to intangible rather than tangible assets, human, natural, and social capital are all represent important ESG-related information that investors need to have. The challenge was to present all this information in a comparable form in order for market participants to benchmark a company performance. It is very interesting to say that globally, the percentage of both retail and institutional investors that apply ESG principles to at least a quarter of their portfolios increased from 48% in 2017 to 75% in 2019, according to a BNP Paribas survey of 2019. Disclosure requirements are expected to expand further in the future. The Non-Financial Reporting Directive is currently under review, with upcoming reforms and improvements. Furthermore, under the framework of the EU Green Deal, companies and financial institutions will be expected to improve their disclosure of non-financial information, providing better ESG information to investors and markets. I would like to stress that a key challenge that remains is the lack of standardization in measuring and reporting ESG information. More specifically, the determination of the factors that are essential and principal for a company's thriving and value generation is of great instance. The Athens Stock Exchange has issued a guide on ESG with benchmarks that I would like specifically to allege here today. This recent ethics ESG guide is intended to function as a tool to help companies determine the material ESG issues in their industry and sector, and to ensure that companies report on ESG issues that are directly related to their ability to generate value in the long term. The reporting guide is based on practices outlined in international sustainability guidelines. The guide aims a foundation for further action on ESG and the development of sustainable investments in Greece. It is easily understood that for a local capital market, as Greece's market, enhanced transparency and good governance on ESG matters can reduce investors' uncertainty and build trust. Let's finish with the definition of ESG given by the Ethics Guide. According to this guide, the term ESG encompasses the wide set of environmental, social, and corporate governance considerations that we've discussed before that can impact a company's ability to generate value. In a corporate context, it is used to refer to the incorporation of non-financial considerations into business strategy and decision-making. I found the next slide really interesting as it is used in the guide. Please, can you change? Okay, thanks. It shows, I think, in a very clear way, the three parameters of the ESG. And we can send this to you, of course, after that. And you can see also the guide in the internet as it is published. I would like to stress a final remark, and to finish with that, as a food for thought, a non-financial factor of today, it is for sure that it might be a financial one in the future. So this is why investors are really looking very carefully nowadays these parameters, as ESG factors are linked to business competitiveness. The way in which a company manages ESG certainly, in the end of the day, will have a financial impact. Thank you for your presence.
Thank you, Mrs. Gouskou. Thank you for this charming and very useful and very practical presentation. It was a pleasure to see you and see your ideas.